So, today I'm going to talk about the advantages and disadvantages between private and public limited companies. Yeah. Stuff. A public limited company. Companies which can sell, share on the stock exchange are public limited companies. These companies usually write PLC after their names. The minimum value of the shares to be issued in the UK is 50,000. Damn! Some of the advantages of being a PLC are that there is limited liability for all your shareholders. And that is insane, man. Yeah. The business has separate legal entities. There is continue for the company, even though if one of the shareholders pretty much dies like that.
No people called Sid were harmed in the making of this production. This was just a stunt.
So either way, another advantage, the businesses can raise large capital sums as there is no limit to the number of shareholders you can have. So you can pretty much have an army paying £1 each just for a little look at the gossip. Either way, okay, the shares of the business are freely transferable, providing more, I can't say the word, so I'm just going to try it, liquidity to its shareholders. I think that's good. Yeah. Disadvantage for the PLC. The original owner may lose control, i.e. if I am the original owner, I try to get people involved and they turn on me. I try to say, no, I don't want to change the name to make it stupid. They can do what they want and they can just overpower me because I only have a certain amount of authority there, because my vote only counts as one instead of more, no matter how many shares I have. There's a lot of legal formalities required for the formatting of a public limited company, and it costs time and money. So as much as it's a good idea to do, it's not exactly quick and easy. You've got to hurry up and get it done first. In order to progress the interest of the original investor, there are strict controls and regulations to comply. These companies have to publish their accounts. So, yeah, stuff. Public limited companies are huge in size and may face management problems such as slow decision making and industrial relationship problems. Stuff like that, really. They're big and problems can happen, like with anything. So yeah, watch out, guys. Okay, moving on. We've now got private limited companies, or an LTD. Now, they are close. One second. These are closely held up businesses, usually run by families, friends and relatives. Private companies may issue stock and have shareholders, but they tend to keep them in amongst themselves. However, their shares do not trade on public exchanges and are not issued through public offering of shareholders. Pretty much means no one from the outside world can come in, buy shares and interfere in the company in any way, so all the group of them have full control the shares and anything that goes towards the company, whether that's shares or debt or anything. Shareholders may not be able to sell their shares without the agreement of the other shareholders. So yeah, like if your family as such has a business and I wanted to, well, if you wanted to, why would I be involved with your family? If you wanted to get out of the business, you would have to try to convince them to let you out as such. Sounds more like an imprisonment when I put it that way, but yeah, it's pretty much that. So deal with it, yeah. An advantage of an LTD. There is limited liability. It means that if the companies experience finance distress because of normal business activities, the personal assets of the shareholders will not be at risk. Again, I have no clue what's up with me. They will not be at risk of being seized by creditors. Yeah. Oh yeah, if one of the members of the owners in that, because it's only a small area and for instance a family, if the descendant or anything, basically the main owner dies, the business can't move on because they need the main approval of the owner or the owners. Minimum number of shareholders need to start are only 2. It can go right up to 20, no matter. It all depends on the type of business you've got, really, whether you want to include more people or not. More capital and can be raised as minimum or maximum number of shareholders is allowed to 50. Oh, 50, sorry, I thought it was 20, but yeah, it's 50. Okay, another advantage, scope of expansion is higher because easy to raise capital from financial institutions and the advantages of limited liability. Basically means it's easier to make general money, as much as it's more to do with like small businesses, like because they are normally family run business, aren't massive. However, you do get family run business which are massive. So yeah, and it should be a lot easier to gain money more financially from this. Disadvantages, there's not many in LTDs, by the way. I've noticed that there's a lot more advantages than disadvantages. But here are some disadvantages. The shares in a private limited company cannot be sold or transferred to anyone else, the agreement of other shareholders. Basically, the shares of a company can't be sold externally in any sort of way without any sort of approval from the other people that have shares. Another one, growth may be limited because maximum shareholders are allowed are only 50. Now, if you want to have more shareholders, stock market is a great way to do it. So a PLC would be the right company for you. Whilst with this, you're limited to that, so you can only have a maximum of 50, which restricts you to some extent depending on the largeness of your company. However, it's not really essential for your very small scale production team. So yeah, that's my private and public media production video. Yeah, hope you enjoyed it. I hope my shares don't die with me, but I'm gonna die now. Bye.
Again, just to recap, no people called Sid were harmed in the making of this production.